Welcome to the Daily Briefing from interest.co.nz. I'm David Chaston. Today we look at the dramatic rate change by the US Fed overnight, check recent electronic card transaction levels, update the latest rate premium data, and we'll wrap up with what the other media are reporting. The US Federal Open Market Committee decided overnight to lower its federal funds rate 50 basis points to 4.75%. Economic growth was moderate in the US during the first half of the year, but the tightening of credit conditions has the potential to intensify the housing correction and to restrain economic growth more generally. This latest action is intended to help forestall some of the adverse effects on their broader economy that might otherwise arise from the disruptions in financial markets. And those financial markets had widely expected the Fed to lower overnight borrowing costs, but were split over whether the move would be a quarter point or a more aggressive half point. But it was the more aggressive stance that has been taken, and it was unanimously done by the Fed governors. Wall Street surged higher on the news, but their currency fell, and ours gained, jumping more than 1 cent to well over 72 US cents. Clearly, regulators in Europe and North America are worried by the growing impacts of the credit crunch. The Fed's move today contrasts sharply with the wait-and-see attitude of the Europeans, even though it is the Europeans who seem to have the more dramatic market impacts. Bucking the recent trend, the August electronic card transaction data was up almost 9% in value compared with the same month a year earlier. The electronic card transaction series measures the number and value of credit, debit and charge card transactions with New Zealand-based merchants. It is a census of all card transactions processed within New Zealand. Transactions by overseas cardholders in New Zealand are included. Transactions by New Zealand cardholders overseas are not. This latest data suggests a pickup in retail sales in August and an improvement in the state of the domestic economy. However, it should be remembered that this data reflects not only changes in spending and prices, but also changes in merchants and customer use of payment methods. The average value of a transaction changed very little in August and remains about $57.25, where it has been for a number of years. The Fed rate drop has changed the landscape for New Zealand rates. As we mentioned earlier, the exchange rate has taken off against the US dollar as that currency falls against most others. Part of this can be explained by the changing rate differentials. The New Zealand interest rate basis in the OCR has seen a dramatic rise in our premium over the US federal funds basis. During 2007, our rate premium has risen from 2% to its current 3.5%. If you look at these rate differentials after deducting the local consumer price index levels for each country, the after inflation or real differential has now shot up to almost 4%. That is, the real return is almost 4% better here than in the world's largest economy. So it should not be too much of a surprise that the carry trade is back on the agenda and looking like a promising strategy again, especially versus the US. Finally today, a quick wrap-up of some other recent news. A BNZ survey that included some residential real estate sector sentiment has presented a pessimistic picture, with many professionals saying the market has turned down, and fast. The Reserve Bank has definitely overdone interest rate rises this year and should slash the rates in line with Australia, economic forecasting group Burl said. It made those comments before the Fed drop in rates. Those of you that follow British news will know of the problems at their bank Northern Rock. Its collapse was imminent following an investor run, but their authorities have now had to step in and guarantee all depositors. The deposit insurance system in that country has saved investors from an ugly outcome. You can get more news and stay up with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.